Okay, so today we're going to talk about real estate investing done right. All right, and you can find this article on tjtrue.com right underneath where it says true knowledge, and it's going to be under the wealth category. All right, now before we get started, please remember like, share, comment, and subscribe. Now, when it's done right, real estate investing is a stable way to increase wealth over a period of time. It provides better returns than the stock market without a much volatility. Historically, in real estate, your risk of loss is minimized by the length of time you hold on to your property. When the market improves, so does the value of your home, and as a result, you build equity. With the stock market, the risk never changes, and there are numerous factors beyond your control that can negatively impact your investment. Hence, the Great Depression, fueled by the stock market. So short-term investments. All right. So great news. Great news though. Investing in real estate is not as cut and dry and traditional as it used to be. With the modernized of today, technology usage and our community, there are a few out-of-the-box ways you can still participate in real estate investment and receive benefits. Renting out of room in your own home as short-term real estate investment might cause your friends or family members to raise an eyebrow. However, it's commonplace practice, especially in high-priced cities such as New York and Los Angeles, where people become existing roommates even in apartments through subletting a room. Also, many homeowners have embraced that thought of renting out a space rooms on a short term basis through popular home sharing rental platforms and apps such as Airbnb and HomeAway. Now we're going to talk about long-term investment, and we do have a video about how to build black wealth, and we're actually going to put that in the description box for you guys. So rentals are what we are used to when we think of real estate. It essentially requires a home purchase and long-term rental with traditional tenant agreements in which the tenant is essentially paying your mortgage for you while you get the tax benefits. Traditional real estate investing via long-term is known to pose less risk and give landlords more financial security and stability. Becoming a landlord is not a passive job though, and there is a lot of logistics involved in order to maintain the state of the property as well as to keep your tenants happy and be prepared for vacancies. And we also have another video on how to wholesale real estate free training. Now, we're also going to post a link to this video down at the bottom in the description, and this is to flip or not to flip. All right, so wholesaling and house flipping are two forms of real estate that have become much more prominent today with many TV shows like Fixer Upper, Flip or Flop, and Flip This House. When a property investor buys a house with the intention to fix it up and quickly resell it, he is flipping it. Typically, they'll buy the home, make necessary repairs, upgrade the systems, style, and design the property, and sell the house at a profit within a few months. House flipping can also refer to purchasing and reselling properties in a market where home valuations are on the rise. Like any investment strategy, house flipping has its pros and cons. Because it requires such an investment, ask yourself the following questions before deciding to flip a house: the price of the home and how affordable is the home you're considering, local market conditions, what is the local buying demand like, is it likely you'll be able to sell the home in a few months? The condition and the location of the home. How much repair work will the home need? Are there major issues like foundation cracks or roof leaks to fix, or is it all minor and aesthetic? Timeline: given the repairs and upgrades needed, how long will it take to complete the project? Will you be able to get an ROI when expected? Budget: credit or financing? Do you have enough money to cover the cost of the home, closing costs, and all the expenses associated with repairs, upgrades, marketing, and selling it? Now let's go ahead and talk about the private benefactors. The private lender operate quite differently. Private money lending is when the individuals lend their own money to other investors or professionally managed real estate funds, all while securing the loan with a mortgage. Essentially, private money lending services as an alternative to traditional lending institutions like big banks. Leaving your hard-earned money in a savings account is no way to protect and grow your assets. In the end of the day, private money lending allows you to secure a loan with real estate that is worth much more than the loan. Private money lending enables investors to create their own loan terms. Investors who utilize private money lending are typically able to obtain funding quicker if they borrowed from a traditional banking institution. And finally, all in all, there are so many ways that real estate investors can add to your overall wealth. One of the most pleasing aspects of real estate investment is the value it has for your own family. The capability of passing properties down to your children, enabling them to enjoy the benefits of your investments long after you're done, leaving a legacy of wealth. Real estate creates lasting wealth that carries far into the future. Do your research and know what is best for you. Remember, building wealth does not happen overnight. Well, that is unless you win the lottery or score big at a casino. So otherwise, patience is still a virtue and important when investing in real estate. But good things are always worth the wait. Now, you can find more information about real estate investing done right on tjtrue.com. And this is Raven. Thank you for watching the video and see you next time.